And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
And welcome to Friday's edition of the Lance Roberts Show podcast, right here at MillerInvestmentAdvice.com. Thank you for joining us today. As always, we are here to talk about the markets and, of course, your money and what's important to you. And as we start to wrap up the market close here, again, it's going to take a few minutes to settle out, but the S&P finished the day down another 6.5 points. Now, it was a bit worse earlier today, and actually at one point today, it actually gotten down about 12, 14 points because more threats from the Trump administration on more tariffs regards to China. And again, this whole tariff trade war issue is something that continues to weigh on asset prices temporarily, but more importantly, on a longer term basis, it's also going to impact what's happening with corporate profitability as well. Higher tariffs is basically a tax on consumers as well as a tax on corporate profits. So keep a watch on that and what happens out of the White House, because it will matter. The stronger dollar also up today on the back of, well, what was expected to be, or was actually, I shouldn't say expected to be, what was better than expected employment data that came out today. We added over 200,000 jobs for the month. Now, while the headline was good, we look back over the last 2 months, both June and July were revised lower in terms of the number of jobs that were created. Now, this is important because when we look at the trend of employment growth, the trend of employment growth has begun to decline, although we are continuing to pump out roughly about 200,000 jobs in the month of August. Also, we saw wage growth pop up a little bit stronger than expected, came in at 0.4 versus estimates of 0.2. And of course, that led to a stronger rally in the dollar today, of course, over concerns of not only just a stronger economy, but rising inflation. We saw money move into the dollar. We saw money flow out of fixed income. And of course, fixed income actually ticked up to about 2.92% today on the back of that stronger than expected income number. Now, having said that, though, while today's income number was impressive in terms of it being up 0.4%, this is a nominal number. And when we get CPI out in the next couple of days, we will see a revision in that wage data that has gone down. And of course, what we've seen here is that wage growth really since the beginning of the year, because inflationary pressures are kind of kicking up in the market, and a lot of this has really fed around the fact that oil prices have been going up, that we have seen wage growth, real wage growth, after inflation wage growth actually has remained flat since the beginning of this year. So if you take a look at the labor force participation rate, it actually ticked down 0.2 of a point, went from 67.9 to 67.7. Employment to population really remains very stagnant, very lackluster at this point. And we look at the labor force participation rate, it's basically been flat for the last several years. So again, the employment number was good today. It helped give a bit of relief to the stocks this morning. But again, that trade data or the trade numbers really started to weigh on stocks this afternoon. And again, we finished the day down at about 7 points. And again, and not a terrible day, but when we look at the technicals of this is the one thing we've been watching here as of late. What's important here, we talked about this earlier, is that this breakout in the market of these previous highs that we had set, back in January, we broke out of those highs, we set all-time records, everybody was very excited, and we said at that point that it was very important that not only did you actually get this breakout, but importantly, what happened here was that we needed a bit of a pullback in order to make this actually a viable entry opportunity for portfolios. And we said as long as we can come back down and retest these breakout highs and hold there, then we'll get an opportunity to add some exposure to portfolios. And that's what we've actually had happen here over the last couple of a few days. And I'm getting emails. The market's pulled back about a whopping 15 points here altogether. And I'm getting emails like, oh my gosh, this is a massive correction. Well, it has been a pretty good correction in technology stocks. If you look across the board at technology from both semiconductors as well as social media, Amazon and others, there's actually been a pretty big rotational correction out of those sectors into other areas of the market. But overall, the S&P really hasn't gone down that much. And each one of these little declines on the way down back to retest this breakout high has actually been bottoming and rallying by the end of the day. So we've seen a lot of late day buying coming into the markets. And so long as we continue to hold this support level where we are right now, which is right around this 2870 level, 2880, as long as we can remain in there for the next couple of days, get past Monday, Tuesday of next week. Remember, this was a holiday shortened week, so a lot of people really kind of trading was very light this week. Next week will be much more concentrated in terms of what traders are doing. But as long as we can hold this level, we got a shot to retest these previous highs, maybe even make new highs. And we're looking to maybe add some equity exposure to portfolios in the next week. But remind, as I said yesterday, and again, this is kind of what we keep coming back to, as we said earlier, when the markets had broken out to these previous highs, that we'd gotten very overbought. And as I said yesterday, this pullback has continued to work, and we've now worked off a lot of that overbought condition. We're now actually in an oversold condition. And previously, whenever we've had the same levels of oversold condition, those have actually been decent opportunities to add to portfolios and add some equity. And again, we're back into this position again. The uptrend of this recent rally remains intact. We got oversold, and we're sitting on support. So if there's a time or an opportunity that you're going to get to add some exposure to portfolios in the next week, we're probably pretty close to that. Now, it doesn't mean that this market can't go lower. Again, if you take a look at technology stocks, they are certainly weighing on the markets currently, and considering and we talked about this yesterday, considering that technology makes up 26% of the S&P 500, well, so goes technology, so goes the market. And the weakness in technology, there is a sell signal in tech right now that suggests that technology could have some more pressure next week. Certainly some of the internals don't look good right now. So that does suggest that we could see more of a sell-off next week. So be careful, don't run out Monday morning and just start buying stuff. Let's see where this market opens up on Monday. Let's see how the markets kind of rebalance themselves over the weekend, see what news flow there is. On Monday, we'll take a look at the markets. On Tuesday, we'll update our Technically Speaking post, which is on our website. Every Tuesday, we send that out. If you go to the website, realinvestmentadvice.com, click the subscribe button. We'll email you both our newsletter, which comes out tomorrow, and then, of course, our Technically Speaking post, which updates our analysis from the weekend on Tuesday. So if you subscribe at the website, absolutely free. We'll email both of those to you to make sure you have the data to manage your portfolio accordingly. Now look, again, as we talked about yesterday, this is a very short-term view of the markets. Once we start getting out longer term, the concern here, whoops, that's not what I wanted. The concern here longer term is that we are still in a very overbought condition within the markets longer term. We are moving into the end of the year. That's good news. But there is certainly concerns here currently relative to the markets based on, well, what's happening with both trade, what's going on with tariffs, what's happening internationally, strength of the dollar. That's one issue. Emerging markets is another. We talked about that here recently. All those are starting to send signals that, well, maybe the market's not quite as healthy as we would want to have a lot of capital exposed to the markets. But again, right now, everything appears to be somewhat in order. We are moving into the seasonally strong part of the year, which is October, November, December. And of course, at this point, in this juncture, economic data, it's not great, but it's not terrible. And confidence is really high. Now, when we take a look at jobless claims being at historic lows, when we take a look at employment being low, when we take a look at confidence being at all-time highs, as we said before, this is all good. But it's also what happens at the end of an investment cycle, not the beginning of a new one. Bull markets end when everything is at its best. Bear markets end when everything is at its absolute worst. And right now, there's a lot of data that we look at that simply suggests that things can't get just a whole lot better than they are right now. And that should give you a little bit of pause here about expecting, when people tell you, it's like, oh, this market's going to run for another 10 years. You might want to step back, take a little bit of pause with that, as we're already 10 years into a bull market cycle. We're at the longest market cycle on record. And as we've said often, records are records for a reason, because that's where previous markets ended their cycles. One other thing I wanted to look at here real quick with you while we're talking about this. Again, we take a look at some of these tech stocks, and this is really kind of the key factor. September the 28th. there's going to be a rebalancing in the S&P 500, and a lot of your favorite tech stocks, and particularly in the FANG sector, the original FANGs, which are Facebook, Amazon, Netflix, and Google, are all getting reshuffled into new indexes. So the new communications index is going to house 3 of your favorite FANGs. Facebook, Netflix, and Google are all moving into communications. Now, the interesting thing about this is that telecommunications used to be a defensive sector. It was the old Ma Bells, the Southwestern Bells, the AT&T. That was where you went to when you were looking for defense against a market. Well, now we're taking that defensive sector and we're just socking it full of juice with a lot of these high-flying technology companies. So this reshuffling in the indexes is going to take weight out of the technology sector. It's going to increase the weight of discretionary and increase the weight of telecommunications, which is going to have an impact on portfolios and how your portfolios perform. So understand what you own. That's always the most important thing. Not buy what you know, but also understand what you own. And we'll be back after the break. More of the Lance Roberts Show coming at you right in a second.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at LanceRobertsShow.com.
A new professional version of Real Investment Advice is coming in September, but you can subscribe now for free at RealInvestmentAdvice.com and click on the RIA Pro tab. You'll have access to Lance Roberts' proprietary stock and ETF portfolios, analysis, and all of the critical investment information you need in one place. RIA Pro, the professional version of Real Investment Advice. Subscribe now for free at RealInvestmentAdvice.com and click on the RIA Pro tab.
Lance Roberts returns Saturday mornings at 9, starting September 8th.
Policies should be fiscally conservative for the benefit of our economy.
Lance Roberts returns Saturday mornings at 9 on AM 700, the voice of Texas.